We're getting into our last final story, which is about to be about Signature Bank, which is one of those Silicon Valley banks. As we know, Silicon Valley is pretty much, there was that whole Silicon Valley bank collapse, essentially the same type of thing as the whole FTX thing, where, somebody essentially comes in, they take the customer's money, they spend it in ways they shouldn't, or they're trading it and they're investing it and things like that. Then when the customer comes back and he's like, "Hey, bro, where my $10 at? I gave you $10." They like, we only have 5. Then everybody gets word of that. Oh, wait, what? You couldn't get your money back from Bank of America? Like, what? What? Oh, no, I'm about to go get my money right now. And then they collapse. And then they have to get bailed out by the government. But let's see what's going on with this. Now, this isn't necessarily, I don't believe, about the whole Silicon Valley bank collapse, but I believe this is the trickle down effect that this is going to have. I think this is a very big indicator of how our economy is doing right now. With banks failing, you haven't seen these type of bank failing since 2008. And as we know, 2008 was when the housing crisis was going on. So this is really bad. If you guys think that this is going to be the first bank or the second bank or the third bank that we're seeing go through something like this, nah. This is only the beginning. Is really part 1 of a 4-part series. You know what I'm saying? If this was Harry Potter, we on like book 3, book 2. You know what I'm saying? He isn't really even grown up like that. You know? All right, all right. All right, so it says, on Friday, Signature Bank, customers spooked by the sudden collapse of Silicon Valley Bank withdrew more than $10 billion in deposits, a board member told TNBC. And this is really, really bad for banks, guys. As you guys know, banks are supposed to have cash on hand for all the cash that comes in. You give them $100, that means that they need to have an additional $100 to your $100 just in case you want to take one out. So if they play with your $100, they still have money to, give you if you want your $100 because they're using your $100 for other things. But a lot of banks don't have that because they don't anticipate that so many people will come through and try to get their money off the rip. But when people see stuff like this, like the Silicon Valley Bank, and they see, oh, geez, is my money maybe not as safe as I thought it was and everything like that, people come, they start withdrawing their money, and if the bank can't handle it, then they collapse. And that's what Signature Bank is getting hit with, because they had to withdraw more than $10 billion in deposits. Now it says that run on deposits quickly led to the 3rd largest bank failure in U.S. history. Let's take a drink to that. Whoa. In U.S. history, regulators announced that late Sunday that Signature was being taken over to protect its depositors and the stability of the U.S. financial system. This is not good, people. This is not good. Now, the sudden move shocked executives of Signature Bank, a New York-based institution with deep ties to the real estate and legal industries, said board member and U.S. Republican Barney Frank. Signature had 40 branches, assets of over $110.36 billion. Excuse me. And, excuse me again. And deposits of $88.59 billion at the end of 2022, according to a regulatory filing. So they have assets of 110, so obviously they should be able to, pay out this $10 billion and everything like that. But guys, this is a problem. When people are pulling money out of their banks that fast, it's a problem. It's not a good look at all, especially in the economy that we're in. Now it says, we have no indication of problems until we get a deposit run late Friday, which was purely contagion from SVB, which is, the Silicon Valley Bank. Problems for U.S. banks with exposure to the frothiest. When I'm thinking about frothy, I'm thinking about like a Starbucks, like coffee, like the cream on the top, like it's frothy, like very frothy texture, But it's an interesting way to use it. Asset classes of the, I guess it means like the thickest, like thick like Ice Spice. COVID pandemic, crypto and tech startups boiled over last week with the wind down of the crypto-centric Silvergate Bank. While that firm's demise had been long expected, it helped ignite a panic about banks with high levels of uninsured deposits. Venture capital investors and founders drained their Silicon Valley bank accounts Thursday, leading to its seizure from the government midday Friday. Now, it said that led to pressure on Signature, First Republic, and other names late last week on fears that uninsured deposits could be locked up or you lose value, either of which could be fatal to startups. And it seems like right now, I would say this seems to be secluded to, like they said, crypto banks, banks that aren't going to be as insured or as backed by the government as something, like Bank of America or Citigroup or something like that, because they're kind of, in a way, you could almost call them more prestigious in a way. Is they're banks that people in Silicon Valley would go to. They're banks that richer people would go to. Banks that crypto people would go to. Just banks that the average everyday American probably wouldn't have, and everything like that. But some of the benefits that make it the reason that you would want that could also be your downfall, and that's kind of what's happening here. A lot of times you can take on more risks using these type of banks and everything like that, and a lot of the risk that you take on, which can allow you to potentially make a lot more money or possibly protect it from things like, you being sued and everything like that, can also come in a negative light when it's things like this and the bank isn't as insured or it's not as government backed and everything like that. Now, it says Signature Bank was founded in 2001 as more business-friendly alternative to the big banks. It expanded to the West Coast and then opened itself up to the crypto industry in 2018, which helped turbocharge deposit growth in recent years. They created 24/7 payments network for crypto clients and has 16.5 billion in deposits from digital asset related customers. Yes, sir. Now, but it says, as waves of concern spread late last week, Signature customers moved deposits to bigger banks, including JP Morgan Chase and Citigroup. So basically, they thought it would be cool to have, kind of like a Swiss bank account. You know what I'm saying? Just some bank that has more features, for possibly business owners and or the wealthy, or the upper class and everything like that. Now they want to throw their money back into. Now they want to go back to the Bank of Americas, the Citigroups, which you can't really blame them because right now they're good. But I do think that this is going to start having an effect on just normal banks and things like that. When people really feel those financial pressures, obviously the economy's bad. It's harder for them to trade and invest your money and everything like that, which means they're probably losing a lot of money. And the only reason they're not getting exposed is because everybody isn't going to Bank of America talking about, hey, I need to get all my money out. Because if they were, I guarantee you Bank of America would be exposed to like right now. You feel me? You feel me? You feel me? Now it says, Signature executives explored all avenues to shore up its situation, including finding more capital, engaging interest from potential acquirers. The deposit exodus has slowed by Sunday, and they believe the situation had become, stabilized, essentially, and everything like that. When your customers come and you're a bank and they ask for the money, you got to have it. So they're saying, okay, we went through the hard part, probably lose a few $1 billion with customers coming in, taking all their money out. Now it's kind of stabilizing. People will be putting money back in, which should help that and everything like that. But I think this is the beginning of the end. I think the whole Silicon Valley thing was just the start to what's probably going to be a lot of bank crashes. I just foresee in the formidable future. Now it says, instead, Signature's top managers have been summarily removed and the bank was shuttered Saturday. Regulators are now conducting a sales process for the bank while guaranteeing that customers will have access to deposits and service will continue interrupted. Now, the poster child. I wonder what would be considered the poster child. I would think that Silicon Valley Bank would be the poster child, or what do you call it? Like the scapegoat, the one to help us all kind of understand what's going on with these situations, because they're the first one. Kind of like with the crypto scams. Now FTX is known as the main one. And when they crack down on any other type of crypto scams or anything like that, they're definitely going to reference the FTX scam and kind of think about it and process it, like that. Now let's see why it says poster child. The move raised some eyebrows among observers in the same Sunday announcement that identified SVB and Signature Bank as risks to financial stability. Regulators announced new facilities to shore up confidence in the country's other banks. Another bank that had been under pressure in recent days, First Republic, declared that it had more than $70 billion in untapped funding from the Federal Reserve and JP Morgan Chase. This is ridiculous. Why do they have all that? Like this is the point where it's like the US wants to keep the banks running so bad that they're just giving them so much money. It's almost like an unlimited money. Like, oh, we'll just print more for you. Like Jerome Powell, that's why I have him on the thumbnail of this. Like, oh, we'll just print more money. Like, what you need? What you need? Like, what you need? I got it. You know what I'm saying? It's like the neighborhood drug dealer. Like, what do you need? You need this? You need this? You need Tylenol? You need Tylenol? You need Plan B? You need a snack? Like, bro, what? What are you talking about? But he said, for his part, Frank, who helped draft the landmark Dodd-Frank Act after the 2008 financial crisis, said there was no real objective reason that Signature had to be seized. I think a part of what happened was that regulators want to send a very strong anti-crypto message. That's actually pretty interesting. We became the poster boy because there was no insolvency based on the fundamentals. And I would say I could actually believe this. The government has been cracking down on a lot of crypto. Governments haven't really liked it, which makes a lot of sense because crypto is a decentralized currency, which will make you get away from your country's currency, which the country has control of. Obviously, they don't want to really promote things that they don't have control of when they have the option to promote what they do have control of. So this is something that I could definitely see. They're being a little biased, what I'm saying, for that reason. So guys, I want to hear what you guys think about this and everything like that. Very interesting stories that we've had today, from China and the military to Russia, influencing the election fraud to even Signature Bank and Silicon Valley Bank's collapse and what that could possibly mean for the recession and, the economy of the United States in the future. If you guys like this type of content, definitely like, comment, subscribe. I want to know what you guys think about this whole situation and everything like that. And if you just want to say hi, just say hi. You know what I'm saying? I always respond to all the comments and everything like that. And they genuinely bring a smile on my face and make my day better. So I appreciate you guys for that. I hope you guys have had a great night. Shout out to all the people that popped into the stream. I definitely appreciate that. We're really growing on this channel over here. And I've been doing this for, a few years now. So, just seeing the growth is just a beautiful thing. I enjoy doing this. So I'd be doing this regardless of if I had 1 subscriber or if I had 30,000, you know what I'm saying? So I'm going to keep going and I'm going to keep coming with the content for y'all. And if y'all like the content, keep liking and subscribing to show me support and bring more people to this channel. So you guys all have a great day. It's been a great stream. I love you guys and y'all all have a great and blessed day.